you've seen it, I'm sure, is on the business news is have people overinvested in AI, right? I mean, everybody did it because they're like, well, if we don't do it, we're going to fall behind, and this, and so what generally happens is you have a bit of hysteria, and clearly some of the investments you're doing are probably just negative MPV.
Yeah.
And so the market had sort of for a while believed this was, AI investment's a good thing. And now I think you're starting to see they're being a little more careful about it. That I don't know, is who's going to win this race? And even if they win it, are they going to be able to monetize it? Or is it going to be something that somebody says, I see what you did. I can reproduce a model like that myself. In which case, kind of like the internet. I mean, we think if you think back to the internet boom in the late
Yeah.
90s, all these companies skyrocketing and then tanking, it's because the benefits of the internet largely got distributed to consumers, right?
Mhm.
I could use, a search engine for free, basically. I mean, Google said, as long as you let us use your data, we'll let you use this for free. And consumers got the benefit of all this. And what all that they had to pay for it was, you can track what I do and use it to figure out what ads you want to put on my site. Not to say Google didn't benefit financially from that, but at the end of the day, there's a lot of the time we see technological innovation, the benefits of them don't always accrue purely to the producers of it, the companies. A lot of it gets distributed to the consumers through forms of competition and price adjustments, and consumers just say, well, I'm not going to pay that price for it. It gets knocked down. And I think there's some growing concern that AI may be that way, that it'll be so common, it'll kind of be like the internet. We'll all be able to use it for generally very little to no actual use cost, yet it's expensive to produce, right? You got to
Yeah.
build the models, you got to train them, that it retires tons and tons of access to data, tons and tons of energy. So I think the market's probably starting to rethink that, well, maybe all this investment going in cannot have a 10 or it cannot have a 15 or 20% annual payoff. And so they're getting more picky on who they think's going to win and who they think's going to lose. And right now, I think it may just be too early to tell. But what it means is you kind of just lower your expectations on average for the whole portfolio. But it's, if this is what makes business, and finance fascinating, is you don't necessarily know upfront who the winners and losers are going to be. And sometimes they're not the companies you expect them to be when we started, right? I mean, if you go back and think who the big companies were in the internet and early on, I mean, AOL and these guys, they completely collapsed. And
Yeah.
these little tiny startups that nobody had heard of, Facebook and Google and Amazon. Suddenly, Amazon, what are you selling books on the, now look at them. So
Yeah.
I think the market does a great job, right? They eventually figure out and they get it right in the sense that the people who win, um, you know, are able to capture some of those benefits. But I think with AI, it's too early to know, and there's a lot of money being put into the competition. And you've seen this throughout history in the US. Railroads in the 1800s, the car companies in the 1930s, 40s. Even now, to some extent, car companies are still, the electric car thing is another whole form of consolidation and who's going to win that battle. But, Tesla was the big early lead. It's increasingly less obvious that they may be the winner now, but this is the way the market works. So I think, I'm not worried about it. I just think the hype around AI is we've seen this before, and it's not unreasonable to believe that the average price of an AI stock was on average too high. There are a couple of them that are worth a lot at the current price, but there's several that are going to turn out to be not good at the current price. And so you either put your money on a horse. If you're going to buy the whole portfolio, you're going to win a few and lose a lot in others. So, take your bumps.